Okay, we have an important week this week. We've got earnings, we've got the presidential election, and we've got the Fed come Thursday, apparently delaying their meeting due to the presidential election. We had the Dow down by 257 points, down by 0.61%. S&P was down 0.28%, down 16 points to close at 5712, 13 rounding up. NASDAQ was down 0.33%, so it was up 0.40%. So still diverging with the S&P 500. Keep that in mind. That's what usually happens surrounding tops. Again, I'm looking for a top. The jury is still out if that peak was on October 17th or not. Watching the next rally as we move to go try to fill the gap if that does occur. Surrounding key support levels that we're at right now. The VIX was up 0.46%. Just under 22. Again, the VIX continues to hover above the 18 to 20 area. And when that happens, there's risk of volatility increasing, and also with the 50 being above the 200 on the VIX daily chart, those moving averages. The S&P is testing the 50-period moving average and horizontal support, again, from the July peak. That's horizontal support directly below. This is where we found support when we formed our triangle, and when we broke out and we back tested it, we formed a triangle there. NASDAQ hadn't filled the gap. I told you we were still going to go higher from there. Then we formed another triangle, but that had a downward resolution there on Halloween. Do we hit this level and go a little bit lower or try to bounce where we're at right now? S&P moves slightly lower. NASDAQ got a slightly higher high. So we'll see, again, do we complete divergences still that need a little bit more work to be done on those 60-minute charts? And as what I'm watching is, do we start going negative this week and end up getting a bigger sell-off? That's not really being expected. So does that happen? Or do we go back up and try to fill the gap and bounce off support? It is all about support and resistance. Again, my signals have been bearish from the 23rd. Momentum, and that's when the intraday charts flipped. That's when momentum on the daily charts flipped. I told you momentum had flipped back to bullish with NASDAQ. It went and got a higher high. S&P did not. They diverged, and now we've had this downward resolution of the triangle. We're watching. Does the awesome oscillator go negative? It's just barely in positive territory right now. Does it go negative, or do we turn back up and again try to get confirmation of a lower high, filling the gap, or do we try to get a divergence? Do my signals stay bearish, or do they flip back to bullish? You got the 10 below the 20. Do we stay below the 10 and the 20, or do we get back above the 10 and 20? So again, we'll be watching. Do the signals turn bullish with the presidential election, or with the Fed, or with earnings, or of the above? Or do we see them remain bearish and we get a bigger sell-off and start taking out key support? It is all about support and resistance. So if we bounce off support, then we'll be watching resistance, the moving averages, the gap fill, again, broken trend lines from our rising wedges. So right now, awesome oscillator still in positive territory. Will it go negative this week, or will it turn back up and we'll start seeing green bars? We'll be watching. Previously, I told you I thought maybe we would get green bars if it could get an upward resolution of the triangle and join NASDAQ. It did not, and we had that reversal. This turned trend signals bearish over here on the 23rd. We saw momentum turn bearish. So you have momentum and trend signals bearish at the moment. In the weekly chart, we got a red awesome oscillator bar. Last week we got one. This week, do we get something like what we had over here that produced this reversal, just a multiple point divergence? Is that what we now have, to where we're going to see this turn? Again, dropping below the 10-week moving average and getting a reversal of conditions here in the weekly time frame, having it remain that way. Again, at these other sell-offs, we bounced off the 20-week moving average. Here we got below it, but got right back above it, bounced off the 20-week, got to drop below the 10 and then stay below it and take out that 20-week moving average. Now we're starting the week off with the red bar. The week is young. We'll see. Do we bounce off the 10-week or decisively break it? We'll be watching to see as the bulls and bears fight it out here at the 50-period moving average. Well, the S&P signals remained bearish from the 3rd after we peaked on the 17th. NASDAQ went and made a higher high. The signals turned right back to bullish. S&Ps did not. And then we turned right back to bearish there on Halloween on October 31st. So again, Gap now to be watching. 10 is crossing the 20. Do we just get a gap and go? Do we get a gap and fill? Or do we get a gap and trap? Do we start taking out the 50-period moving average? S&P's right at it. NASDAQ's just above it. We've got the horizontal support level just underneath that from these lows over here. So again, similar situation to the S&P. Awesome oscillator still in positive territory. Does it turn back up? Again, do we get a confirmation of a lower high of divergence, or does this thing just start going negative and we start breaking the 50-period moving average and maybe selling off towards the 200? We do have some in the daily time frame turned on the 23rd. So did the trend signals. Momentum here in the intraday time frame. We turned bearish on the 5th day after peaking. It turned on that Wednesday on the 17th, and we had on the 23rd, and we had peaked on the 17th. Previous Thursday, momentum signals tried to turn back to bullish, but couldn't flip the trend. And again, signals remain bearish intraday. Now, if we get a big rally, we'll see if that changes. But again, you start taking out horizontal support, that's going to be bearish. If we do rally, we'll be watching. Do we get a lower high, fill the gap, and back test the trend lines, or do we go up and try to make a new high? And again, intraday, cloud still bearish, momentum still bearish. We'll be watching to see if these signals begin to change. Same thing here. Again, signals on the 23rd changed, breaking down from that first trend line. We ended up back testing it and then again broke the second trend line, but signals remain bearish. Momentum here intraday tried to turn bullish, but again, signals continue to remain bearish. So power validating it, continuing in the negative region. If my signals start turning back to bullish, we can go fill the gap. If they remain bearish, then the risk is that we take out the 50 in the daily and start coming back and taking out horizontal support. Again, support here, resistance here. In August, I told you we couldn't get above that high. That's why I told you why my signals predicted this sell-off. I told you we are still going to go move to new all-time highs. We are still going to get a Fed pivot rally, which we did after we broke out of here. Then we formed our triangle. I told you we were still going to go higher because NASDAQ hadn't filled the gap yet. And then we formed this diversion. So I told you we formed a triangle. We corrected after that, forming a triangle, which again, I told you could break either way. I told you if S&P try to join the NASDAQ, seeing signals turn back to bullish, then we might get an upward resolution of the triangle. S&P could not. Signals remain bearish. NASDAQ, the signals turn back to bearish, had a divergence from each other. So if we try to get a rally with the election or with the Fed or with earnings, again, I'll be watching. My signals can turn back to bullish, and then again, we'll be looking at the trend lines and the gap. Signals intraday and on the daily chart remain bearish. And again, we still have sell signals intraday for the S&P 500. And the momentum line tried to turn back to bullish, but it couldn't flip the trend signal back. Again, signals remain bearish. The cloud, momentum, and the swing trend all bearish here. Again, could be forming a divergence. We went slightly lower, still may not be done. As I've said, we might go down to horizontal support. And again, possible divergence under construction here intraday. Signals here still remain bearish in the daily time frame. Momentum again flipped on the 23rd after peaking on the 17th, forming that divergence. Again, we had some warning signs that a short-term top was developing. This just looks like momentum, and the X's look at momentum. We had the momentum line turn bearish, turning red. It couldn't turn back up with the triangle formation. Even though NASDAQ did, we didn't get it with the S&P. We had a downward resolution on Halloween there, and then we had the red arrow. So momentum signals were validated over here, the shift in momentum, and it remains bearish. Again, and now the background is turning bearish. We took out the blue line representing the short-term trend. Got to get back above it. It's not red yet, but we got to get back above it if we're going to try to rebound to fill the gap immediately. And then the swing trend move, we've gone flatline right here, and it's turned back to bearish. So again, out the cloud, again, we are now bearish momentum followed by, with October 31st, the taking out of the cloud right there. And again, momentum and the trend are bearish here. And if we're going to try to rebound immediately, that's got to change. If something happens, if there's uncertainty surrounding the election or a delay with the results or something, if we break support, we go lower. If we bounce off of it, then we can go higher. It's all about support and resistance. It really comes down to that. Again, we're seeing signals bearish, In order to rally back up, we've got to see signals turn back to bullish. Do we get that with the election? Do we get a big, massive election rally? Flips everything back to bullish in one big swoop, or breaks support? Momentum remains negative, so we'll be watching to see what happens. Election and the Fed surrounding key support levels that we're at right now. When we bounce off support, if we do these signals revert back to bullish? And again, signals are bearish. Again, the ribbon up here flipped to bearish, the cloud, the background flipped to bearish here, and again, the cloud was taken out. We've seen signals all begin to turn bearish here. They remain that way. The risk is that we keep going. We get an election rally, try to turn these signals back to bullish, fill the gap and back test, break support. We'll be watching support and resistance levels on the daily chart. Resistance, again, the back test of those broken trend lines and the gap fill, the moving averages and so forth. Same thing here for the NASDAQ. Again, we've seen, again, some sell signals here. We saw the cloud flip right here with the sell signal. We saw some momentum. Didn't get the little T like we did with the S&P. The S&P got 3 of them of a turn. We do have, again, bars going on. We've got the momentum. It tried to flip back to bullish here, just like the reversal of conditions. Tried to turn right back to bullish, and it failed here as well. And P couldn't turn back to bullish. That's why I told you that S&P might get an upward resolution of the triangle and join NASDAQ. They ended up diverging from one another. Saw the breakdown on October 31st, and that flipped momentum back to bearish here and changed our trend signals as well. So again, do they remain bearish and we go lower? And that put momentum, completing a triple negative divergence, right back into negative territory. So again, do we selling off at the election, the Fed, and earnings, or do we try to find a bottom and go back and rebound to fill the gap and test the broken trend lines? NASDAQ, we would be getting back above broken trend line from the August low over here. Please support the channel with the link directly below. If you like the charts and indicators, please support the channel. Follow the link below. To a secured site, you can donate any amount you want. I don't have a sponsor, any sponsors. They contact me, I turn those offers down, don't want them. I want to sell you anything. I ask that you support the channel, partner with me, but I need your help. A moment to do that, I would really, really appreciate it. It'd be very encouraging to hear from you. Thank you for your consideration for that. The VIX continues to hold above the upper band. It continues to hold above the 50 period and the 10 and 20 above the 50 as well. Again, we'll be watching. Do we come back and try to fill the gap? And again, can we hold above the 50? If we start moving back to fill the gap on NASDAQ, the VIX S&P can try to fill the gap that we had from Halloween. We'll be watching. See if we try to bounce off horizontal support on S&P or the 50, or do we break those levels? All about support and resistance. Well, the 10-year dropped by 1.19% today. Is it turning off of this trend line now? Again, we'll be watching. If we can get a big sell-off with the 10-year this week with the Fed, that could help the market fill the gap or even try to move to a new high to test levels at 6,000 or just above it. Monthly trend line. Got negative diversions on indicators. Again, we could see the MACD roll over. If the histogram goes negative, turning off the trend line with the 10-year Treasury note yield from April of 2023. And again, if we go down with the yields, the S&P could try to go back up. Currently, a negative correlation at the moment. Today, they were both down. We've seen the rally here. We've seen the S&P sell off, so we'll be watching. Attempt to rally with the Fed and the presidential election. Today we got candles of indecision. NASDAQ 100 was down 69 points, down 0.35%. Again, we had the diversions with NASDAQ 100. It broke the trend line on Halloween on October 31st there, taking out the 10 and 20 with one big swoop. Now the 10 is crossing below the 20. Again, we've broken down. We've tried to back test here the last two sessions. Back above the trend line and fill the gap. You get back above this trend line, back above the moving averages. You can move back to fill the gap. Then again, that would be a bullish sign of strength. These divergences, will we get one more? If we have a continuation pattern and a topping tail yesterday at the trend line, we come down and we take out D100. You have this gap down here, okay, down towards the cloud. You have the 200 period moving average. Just keep going if a successful backtest can continue. Remember, This breakdown has to be valid, has to get confirmation, hasn't gotten that yet, and a follow through. We got to close below the low from October 31st. We got to get a follow through, and that means we take out these moving averages and again continue lower. Now, if we try to bounce here and we get back above this level, then the pattern might be expanding, still might have the same pattern, but again, it could be expanding. Or again, we could just go up here and set up a lower high and then turn right back down and get a fake move above the trend line, but then have the move fail. So we'll be watching. Do we get back above this trend line surrounding the presidential election, surrounding the Fed, surrounding earnings? We'll be watching. We had this rising wedge pattern breakdown. And again, I told you when we gapped down over here on NASDAQ and I predicted this sell-off, I told you eventually we were going to move back up to fill this gap at 20,400. We did that a few weeks ago. Then we tried to push above it here, and then we've turned back down. Do we come back up into this range again? Maybe. We'll see if this high holds. Again, I told you I thought this was the peak back over on July 10th. I still think that because of the trend lines that we slammed into. We could, if I'm wrong about that, we go up and we hit those trend lines again directly overhead, hopefully in the weekly trend lines. But remain bearish as we move to the rest of the week. Again, we have the election, we have the Fed, we have earnings. Right now, momentum is bearish and trend signals are bearish at the moment. Selling off to get a big rally with the election, or are the signals going to remain bearish and turn lower? So again, are the divergences playing out, taking out the trend line, but an important gap to be watching? Again, pretty good chance that if we are in a topping process, that we're likely going to fill that gap. Question is, do we sell off further and go back and try to fill it, or do we do it immediately this week? Do we get an initial rally with the election or with the Fed, or both? Rally with one but then sell off with the other? We'll see what happens. Are earnings in the mix there as well? Watching, will my signals begin to turn back to bullish? Will NASDAQ be able to get back above this broken trend line right here? This is a linear scaling. With the log scaling, we're slightly lower below that trend line. Again, the divergence here did play out correctly. Will we get a triple divergence, much like what we had over here? Do we see price rally back up to try to fill the gap and get back above the broken trend line? Do we see an election or Fed sell-off that takes us below the 50 and the 100? So we'll be watching how this unfolds. And I've been predicting that we'd see new all-time highs on the S&P. So NASDAQ can go back and fill this gap. That's done. I told you now I'm looking for the topping process, and maybe that's done. If NASDAQ has put in a lower high and it's completed here, can't move above this peak, then again, it's possible that the S&P has that peak from July 17th, and we just don't know it yet. But if we rally up further, in which we still could, we can still move to that 6,000 area, just right above 6,000 now on that monthly chart, just below 6,000. But we've moved into a new month, so now it's just above 6,000. And my target level for the S&P has been 5,750 to 6,000. We're in that range, but it may not be done yet. We're looking for evidence. I'm going to be watching, does NASDAQ, if it does get back above the trend line, goes back to fill the gap, is this a gap and trap, or do we confirm this to the downside? Again, if it's a push to new highs, got to be able to clear 20,691, which is a peak over here on July 10th. If we just continue to sell off again, we might fill this gap at a later date. I guarantee we fill the gap, but more than likely, we're going to. The question is, do we do it now or later? The signals are bearish. If they remain bearish, continue to go lower. But if they revert back to bullish, then we can fill it surrounding the election or with the Fed. Again, we could get a possible rally with the election, but then end up, getting a pop and drop. Are at major resistance levels, and we've had the rally ahead of the election, just started to sell off the last few days. So again, we'll be watching time. We've been seeing the rally again. I've been telling you we're going to rally up to 20,400 and fill the gap. Well, that's now happened. Now I'm looking for a topping process in here. Maybe it's done. Like I said, I believe the top was over here. Looking for clues for the top over here, and maybe the lower high that's set up 4 sessions ago. Maybe that is it. We'll be looking what happens with the next rally. We'll be watching the gap fill, and I'll be watching, do we get back above this trend line with NASDAQ? These trend lines on the S&P 500. This scenario right here, I've marked in black. That was a break of our first trend line. We broke down. We back tested, tried to get back above it. It failed. and then we turned and started going sideways. We formed a triangle. I told you triangles can be continuation or reversal patterns that I thought we would try to turn up. Diversions on the awesome oscillator. Told you we can break either way, and I told you my signals had turned bearish on the 23rd. Not bearish, but remained bearish. But NASDAQ signals turned back to bullish. So I was talking about, can S&P join NASDAQ? Went up to a new high. The S&P did not, or recent high, not the peak above July 11th or July 10th. S&P couldn't do it. It made a lower high, and we had a downward resolution of the triangle on Halloween there on October 31st, and we're testing our 50 period. Again, a candle of indecision. 10s crossing the 20 period moving average. Do we rally and try to fill the gap? Do we rally and try to back test the trend lines? This one here or this one here? And again, possible we get some triple divergences going on, some indicators. Possible if we do try to rally off of horizontal support in the 50 period, we just fill the gap and we back test. And again, we get something like this where we sold off here and we went back up and we attempted to fill that gap, and then we resumed the decline, got a very sharp decline right after that. Again, we need more information, evidence, if this is going to be proved to be the top. The jury is still out. I don't have enough evidence to say that, hey, this was the top. That conviction with the NASDAQ in July, a lot of evidence. Still under the long-term trend line time frame, and still the possibility that we exceed this level, get a big rally with the election or with the Fed or whatever, and try to back test and fill these gaps and still move to a new high. So keep that in mind. I talked about this at great length and detail. A few more charts, but before I show you P charts, again, I want to continue to point out, again, gapped lower and we broke down, and now you have this gap resistance, okay, and you got the gap fill up here at the low 5,800 area. Watching if we try to rally back up to fill that gap, a lower high, or do we try to challenge the previous peak? There are two trend lines, and if we back test first trend line that broke, we can even move to a new high. And again, we have that monthly trend line there at the 6,000 area. It's just above it now because last month it was just below it. And again, the trend line is moving to the right of the chart higher every single month. So again, we're watching that 6,000 area. It's like 6,150 or 200 or something like that. Reach it. Throwing the other trend line, reverse off of it. So we'll be watching to see how this unfolds. If we're going to rally with the presidential election, either on election day or the day after the election on Wednesday, we'll be watching. We'll be watching to see if the S&P can get back above the 200 period here in the 5-minute time frame, and if the 50 can get back above it. If we see that tomorrow, election day, or the day after election day, then we can rally back up to try to fill this gap. That's probably got a good shot of happening if we can bounce off the 50, which we're testing right now in the daily time frame, where even if we go a little bit lower, you've got that horizontal support. So if support levels can hold with the 50 period moving average horizontal support, we can go back up and try to fill this gap. Now, maybe we do it immediately. Right now we're testing the 50. We tested it back over here, and we're testing it again today. The lows, the 50 period on the daily chart. That's the price action here over the last couple of days. We'll be watching that 200 period going into tomorrow's session. Do we get above it, or do we go back and go hit horizontal support? So does horizontal support or the 50 period, do they break and we stay below those levels? I just want to watch the 200 period on the 5-minute chart. When you're below it, usually bad things are happening, or you're going sideways, you're going down or sideways. When you're above it, you're going sideways or you're going up here in the 5-minute time frame. Now here's the second trend line we broke, and again, NASDAQ broke it and is just kind of right underneath the trend line. S&P broke it and we're clearly well below it. Do we go back and back test it, fill the gap? And again, if we do try to get back above that trend line, you have the other trend line that, again, excludes the shadow a little higher. If we go back and we try to get a big rally, we can come back up and back test this trend line, fill the gap, and still end up getting a lower high. If we get a higher high, we start breaking the upper boundary of the triangle that broke down. It was a downward resolution. Then you have these trend lines up here, the one from the July peak to our peak right here with their diversions here on the October 17th peak, and the upper boundary of the rising wedge should we try to move higher. Again, let me repeat, we've clearly broken the trend line. Just go back up and back test it, we can resume the decline. And it very well could be we get a big rally that does that. We rally with the election and do that, sell off with the Fed, or rally with both the election and the Fed, but then sell off with another catalyst or with earnings or whatever is in the Middle East, whatever it may be. Or maybe we just rally with the election and sell off with the Fed. It could be either way, assuming we just back test and fill that gap. Now, if we get above the gap again, above the trend line, then again, it's still possible we test the other trend line and move to a new high. Or if we take our time reaching this trend line, it will go further to the right of the chart, further higher. And again, if we took our time reaching it or go a little bit lower and then try to reach it, you still may go to a new high if you do that. So do keep that in mind if we attempt to back test the trend lines, but the trend lines have broken. That's done technical damage. Signals, momentum signals have turned bearish, and then with the breaking of the trend line, trend signals have now turned bearish. Watching to see if that changes. Does momentum turn back to bullish? Topping process complete here. Well, we need to see more evidence of that if that is the case, or is it still under construction? And let me repeat, my target is 5750 to just over 6,000 with that new monthly bar now, long-term monthly trend line. It's still possible this isn't done. What would convince me that it's done is if I started seeing some evidence of that on some of the signals in the weekly chart and trigger like a 50-50 signal. But again, by the time we get a 50-50 signal on a weekly chart, could be we get more technical damage, a lot of technical damage. I'm watching this level. I told you to be watching this level. I told you if this trend line breaks, to watch this level, a horizontal support. 50 period is where we're at right now, trying to bounce there. But if we go a little bit lower, we have horizontal support and this high over here, this kind of support zone that we're watching here in this mid to high 5,600 area. The resistance, trend lines, the gap fill area, the upper boundary of the triangle, support, horizontal support, the 50 period moving average, just things to be paying close attention to. Starting the week off here, we're down 0.28% for Monday, down 16 points. Last week we were down 1.37%. The week before that we were down just under 1%. I believe it was 0.96%. Okay, and we had that peak in mid-October, on October 17th, slamming up against this trend line. I told you we might overthrow it, might just reverse off of it. We turned right off of it. And again, we're now starting to see these negative divergences begin to play out. Now, again, the week is young. The MACD starting the week off, rolling over. And we rebound, and if we do we go up and we slam up into the trend line again, taking us up to the 6,000 area, and again, that monthly trend line, or do we get a lower high if we try to fill the gap? Bearish scenario would be that the signals remain bearish, and we break the support level with the presidential election or with the FOMC meeting. We just saw the chart. S&P is at horizontal support. It's directly below 50 period moving average. So there you have it. If we continue to go lower, we have our 20-week moving average here at the 5,600 level even. Horizontal support, again, is in that mid to high 5,600 area. Rally, does this get prevented from crossing over, or does it still cross over and we get a rally anyways? Do we see the RSI turn back up? We'll see what happens. Do we get a lower high or a higher high, slamming into the trend line, go back and fill the gap and moving above it? Thursday's gap lower on Halloween. Signals remain bearish and break down. Now, again, the signals can remain bearish. We can still get a rally for a lower high, but if we're going to get a big rally above the gap fill and try to move back up here, then again, it still might be, and move towards 6,000, it still might be, we see my signals revert back to bullish. But we'll be watching. Again, the divergences are in play here. Again, we rally with the presidential election or with the Fed or both. Now, the 60-minute chart, we're trying to form a bullish divergence, may not be done yet. We may come back down and hit this low or even take it out and hit that support zone. We'll be watching, again, the support zone from the July peak there. This is where we found support with this first triangle that developed back over here after we got the post-Fed rally. I told you we get a post-Fed rally. We'll be watching the support level. And again, if we lose that support level, that's going to be a bearish event. Possible diversions, carving out, maybe done, maybe not. We'll see what happens, but it could be still under construction. Same thing down here with the MACD, 60-minute chart. If I change charts real fast, you can see this 60-minute chart I have marked here the previous high at the July peak at 56.70. 56.70 rounding up. So again, right there, directly below, if we do go a little bit lower, there's key support there. And then again, the high right here is a little support zone right there in that mid to high 5600 area. So again, do we rally back up and try to back test one of the trend lines or both of them? Watching, and again, does a 50 cross below the 200 period here? And then again, signals remain bearish. If you get the 50 dropping below the 200, you start taking out support, signals remain bearish, then that's going to be the thing. Or do we attempt to back test? We'll be watching that gap. We'll be watching the trend lines and the divergences that are trying to develop here in the 60-minute chart. If they give the S&P a rally, got to get back above that 200 period on the 5-minute chart, back and try to fill the gap. Attention to the 50 horizontal support and the resistance levels of the trend lines that I've talked about. For a rally, we got to get back above that 200 on the 5-minute chart. Now here's a NASDAQ. A 60-minute chart again looks very similar to the S&P 500, only price didn't go. The NASDAQ didn't move to a new low. If it does, it'll form a divergence right here. Still could get a higher low, but again, we could see something like that and then come back up. We'll be watching. Again, do we get back above the broken trend line? Do we come back to fill the gap? And then we'll be watching our recent high. Again, if we can't move to a new high, then you've got a possible ABC move here. You'd have some nice divergences play out here in the 60-minute time frame. But remember, if we do get a big rally, it's still possible we might challenge this peak in the weekly time frame. So do keep that in mind for a topping process, but I told you it still might be that we try to challenge that high. I told you what I think. I think that's the top, but if I'm wrong, the trend line is just directly above that peak. And the reason why I thought that was the top is because of the sequence counts in the weekly and the monthly time frame, the trend lines that we were hitting in the weekly and monthly time frame, the 9 count we got in the daily time frame, and other reasons, this divergence forming at major trend lines in the longer term time frame. So same thing in the daily time frame, we had some sell signals up there as well.